Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at the shipping sector stocks. Alright, there are several stocks that are running right now. We're going to take a look at some of those that are currently in play. Okay, so first up, let's take a look here at RLOG. Okay, so awesome follow through today. Congrats everyone. This was an incredible move, closed up 300%. So that was a fantastic day for RLOG. It does have RSI at 95 and Fasto at 98, so it is pushing very overbought levels on both indicators. It does have a parabolic spike here on ADX. Notice how the green line is almost completely vertical. And so this is the daily chart that we showed in yesterday's video. And yeah, so the key was looking for the break above the 200 and 300-day simple moving averages, and that did happen today. Like we said last night, it had closed just above this June resistance level. Yesterday's candle, I know it's a little hard to see with all the moving averages, but today there was a big move above this red and blue line, which is the 200-day simple moving average at 51 and the 300-day simple moving average at 63. And so those are both two key levels to turn into support. If the candles do work their way back into the bands, the first support level on this chart is all the way down here at EMA 4 at $1. That's the pink line here. And so many times when you do get the candles pushing well above the upper Bollinger Band, the candles work their way back into the bands. So do keep that in mind. In after hours trading right now, RLOG is down to 160. So it's trading 30 cents below the open. I pointed out in last night's video with DCIX that it was trading lower in after hours trading when all the other stocks were trading higher, and DCIX was red today while the other plays were green. So that was a clue that it was that it was under weakness, and so the same pattern is happening today for RLOG. So it really needs to get back above that closing price, that 190 closing price. Okay, so there was a big volume spike down here. Keep in mind, as alerted yesterday, bearish 3 gap ups reversal pattern formed, and today there was another 4th gap. And so the top of the gap, which is hard to see, is the bottom of this candle. So if there was a drop back down into the Bollinger Bands, which the upper Bollinger Band is or the middle Bollinger Band, which is the dotted purple line, is way down here at 44. That would bring let's see, that would fill the gap. No, see let's see here, the top of that candle. Let's see, it's right here at 51. 51 would be the bottom. There's a gap between low of day on today's candle and high of day on yesterday's candle. So it dropped down to 51, and the 200-day simple moving average would fill the gap. So keep that in mind. So let's take a look at the 15-minute chart. See, the RLOG was really bullish today into the close, and as you can see here, it was consolidating sideways, and then it broke out. On the last candle of the day above this 155 resistance zone. We were looking for a break above this 12.15 closing price. It tried to do that multiple times, and it kept failing to do so. And then at the very end, it busted above. So that was a clue. It's looking like it wants to push higher. That's what the charts were signaling. The big key here tomorrow is going to be 143. So even at the 169 level right now in after hours trading, the 160 level, that's still putting it above the top of this channel. What you want to do is you want to see the top of this turned into support here, so it needs to stay above that 155, 157 level. And then if it comes down and breaks below the middle Bollinger Band at 143, that would be your signal that the chart was cooling down. And so it could experience a big pullback and test this 50 simple moving average down at 91 if that middle Bollinger Band breaks. Now to the upside, this is the weekly chart for RLOG, and it looks like it was wanting to push up to this 200-week moving average. We kept giving clues out today on StockTwits to take a look at the weekly chart. It was signaling where it's possibly headed, and so the first key resistance level to break was the November and June high close. Notice how both of these levels are between 120 and 130, and so it is above both of those levels today. And so keep in mind, the weekly candle will not set until the closing bell on Friday, so a lot could happen between now and then. It needs to close above these 2 red lines signs to signal more upside potential. If it drops back below and closes below like these two candles, then it could signal consolidation, and you could see a pullback to the 100-week moving average currently at 80 cents. EMA 4 is down here at 98. So once again, $1 is the next key support level below. To the upside, the key level to break is going to be this 200-week moving average at 262. If there's bullish momentum tomorrow and it continues pushing higher, that would be the next target and the key level to break, and then that would be the level to close above for the week. If it goes up and it hits that level and then it pulls back, that could signal the top. So you know, after 4 gap ups and being up, what is it up now? Up almost 400% on the week. You know, you have to be cautious. I mean, you've got RSI at 86 and Fasto at 98. So I mean, this is near the you know, most likely near the end of this push. We just, you know, are looking out for the final signs that it's breaking down. Okay, so yeah, but the awesome run. The charts are still super bullish. You know, it'll make a great bounce play once it pulls back, once it finally does top out. Okay, so if you look at GSL here, okay, this stock made a really bullish move today. You know, it's got RSI back above 70. Fasto closed at 100. It closed at high of day today at 194. Now this stock is actually doing better than a lot of the other plays after hours. It's actually trading at 198, so it's above the close. So notice it was pushing really hard, and then the bulls are still strong. So that's what you want to see tomorrow, is the continuation of that. That today, the breakout above this double top level from October, right around 160, that was signaling more upside potential. The candle today did close well above the upper Bollinger Band, so if it pulls back into the bands, as long as it holds EM84 at 165, the chart's still super strong. Notice that this has been able to sustain long runs in the past. There's a huge volume spike today, a PSAR bull flip. Notice you've got the golden cross here. The 50-day simple moving average is crossing over the 200-day simple moving average. So the chart's really heating up, and you also have MACD bull crosses on both time frames. So the chart's firing on all cylinders right now. If you look here at the weekly chart, you can see this week there's a bullish break above this gold line, which is the 100-week moving average at 152. So we want to see a close above that level for the week. And then the big resistance level to break is the November high close here at about 2, you know, it's 212, 213, something like that. If you can close above that level for the week, then the next big target is going to be the 200 and 300-week moving averages, the 3 and 326. So above above this 210 to 220 resistance zone, and then it could make a run up here to $3 and 326. Notice the big volume behind the move today. This is the largest volume week since all the way back here in November of 2016, when it made the giant run and headed all the way up here to 450. So yeah, GSL is doing really good, and this is the 15-minute chart here, and as you can see here, it closed very strong into the close. It held EMA 13 support. Notice that it had the big breakout right here on this candle at 215. You know, it popped in the morning, it pulled back, it held middle Bollinger Band support. Notice the candles are all above all the moving averages here. That's exactly what you want to see. It's above the 100, 200, 50, and 300 simple moving averages, and it's holding the middle Bollinger Band, which is the 20 simple moving average. Those are all signals that the chart is strong and has more upside potential. And then the break above this 160 resistance level at 215, that told you it wanted to head higher. That was the big signal to keep riding, and then it closed strong, and that's always the signal to keep riding. I mean, the chart, all you can do is follow the charts. The charts right now are signaling more upside potential, especially when you have this kind of volume going into the close. If you look back here on November 3rd, you can see this big spike. This is what we call the front load. Everybody loaded before the run. You notice the tight Bollinger Bands before the breakout, and then the break above the moving averages. So this is the classic setup that we talk about every day in the chat. So people that are learning our strategies, take note. That's the setup right there. Okay, so SHIP. Okay, nice follow through again. These stocks had nice follow through. It's just, it's hard to get excited when or be you know, enthusiastic or very positive about the chart when you see these black candles form. So you see the black candle that formed today. For us in our strategy, if a black candle forms after a gap up open, notice yet this is yesterday's candle. So we alerted this on the first white candle here when the bullish engulfing happened, and it was bouncing bouncing off the 200-day simple moving average, and then there was really nice follow through today. So last Friday we alerted the setup, and then today there was really nice follow through, and it closed above the middle Bollinger Band. Yesterday, the middle Bollinger Band, the 50-day simple moving average, that's what we were looking for. And then today there was a big gap up open, and it went all the way through our other levels. We wanted to see a break above 125, which was the high close here on the 17th, and then the next big level was going to be the 300-day simple moving average up here at 139, and it gapped up above both levels. So the open today was way up here at above 155, and then the share price actually closed below the open, and that's what creates the black candle, and that's a signal that even though the share price was up on the day, the bears were in control. And so right now it's all coming down to this blue line. Okay, so it's all about the 300 simple moving average, the 300-day simple moving average. If it can hold that level tomorrow, then that's going to signal it can head higher. If you see it drop below that level, currently at 139, it's been testing that level in after hours trading right now. If it drops below, that could signal a potential gap fill. Notice there's a gap right here between the bottom of this candle and the top of this candle. So a drop down here to EMA4 at 120 would fill this gap. And so there's a potential for the gap to fill, and the chart would still stay very bullish, and it could continue a new uptrend. So just keep that in mind, especially with the penny stocks. Many times they pull back to fill the gap, and so the gaps become targets for the market makers and also targets for the traders. You know, if you loaded on Friday when we alerted this, and then you were taking profits today, now you're set up to reload on the gap fill. We always look for the gap fill as the reload target. So between the middle Bollinger Band and the 50-day simple moving average here at 110, 112, and then the top of this candle, that would be the reload level if it drops below the 300-day simple moving average. Okay, so yeah, so keep an eye on SHIP. We're going to see what happens there. Tops, it has once again another black candle. So it had a really nice move. Okay, so it closed up 36%. So congrats everybody. You know, it has RSI at 54, so it has a lot of room to still run on that indicator. You notice here that there was a big gap up open today above the upper Bollinger Band. Yesterday's gap was filled by the long upper wick, and so now there's a gap between high of day yesterday and low of day today. Right now the share price is at 193, so it's around that gap level. The first big support level is going to be 153. Keep in mind the candles like to work their way back into the bands, so if they do and it bounces off EMA4, the chart could still be super strong. And as long as the middle Bollinger Band and the 50-day simple moving average down here at 66 and 74 hold, the uptrend's still intact, and it could continue heading higher. Now if it let's say the wick hits that and it keeps pushing higher, or who knows, it could gap up tomorrow. You never know with these shipping sector stocks. The next big resistance level to break is going to be this gap. There's a gap back here in August, and so the bottom of the gap is going to be a huge resistance level to break. Right now it hit the resistance that we talked about in the last video. You can see here, it's got it hit this zone right here, the resistance zone from August that was key support, and so it needs to break above that. If it can do that, then the bottom of the gap will be the next target. Okay, so keep an eye on tops. It's doing well. It's just might cool down a little bit. We'll have to see what happens. So look at the 15-minute chart. We always watch that to see if the stock is going to break down or not, if it's going to head higher. And so as you can see here, it keeps holding the middle Bollinger Band on the pullbacks. Okay, so each time it's holding the middle Bollinger Band, and so it's back at that level today at the close. So it needs to get back above the middle Bollinger Band, currently at 246, to head higher. If that level turns into resistance and it fails to break this red descending resistance line that's lined up at that level, it could head lower. 220 right now is the big support level. That was the close here on the 1030 candle. If it gets below that, it's going to test this 200 or 50 simple moving average, which is lined up with the top of this gap. Okay, this is the gap that we were talking about on the daily chart. So if it drops down to about 185 or so, that would fill the gap, and then it could test the 50. It's all about right now holding this green line. If it can hold the green line, then it could stay bullish and it could keep heading higher. If you see it drop below that green line, below the $2, that's going to signal downside risk. The chart's cooling down, and that it's better to get on the sidelines looking for a reload lower, because it could drop all the way down here to the 100 simple moving average at 131. And many times these high flyers, sometimes they make nasty pullbacks all the way back to the 300 simple moving average, and that's down at 7 176. So you don't want to get caught up in that. That's why we say it's always a risk to hold a penny stock that is forming candles below the middle Bollinger Band on the 15-minute chart. That's just, you're taking on risk if you do that, if you hold overnight and it's a bearish 15-minute chart. Okay, let's look at DAC. Okay, so this closed up 12%. This chart is actually heating up. Okay, it's got RSI in the bull zone, Fasto in the bull zone. You know, check out plus DI. Notice how it's just snaking along with ADX. It hasn't made the parabolic spike like back here, like the other indicators, and that's why we were you know, alerting this play in our chat today, and why, you know, our members were looking at this because of the previous run. If you look back here in July, there was a nice big run in July, multi-day run, and notice the big volume. And so today was the biggest volume since back here in the July run. And so it closed right at the 200-day simple moving average at 175. That's this red line. And so if it can close above that level, we're thinking it could run up here to the 300-day simple moving average at 210. That would be the next big simple moving average resistance level to break. You know, if it could get above that, then it could really get running. You know, you've got the high close up here at $3. So yeah, so there's a lot of upside potential if it can bust above the 200-day simple moving average. So keep an eye on DAC for a break above that level tomorrow. You can see that there was a recent PSAR bull flip, and then the MACD has been pinched, and the signal line's starting to pull away from the the MACD line starting to pull away from the signal line. So you can see where the lines are starting to separate down here, and they've been pinched in an uptrend, and then you got a PSAR bull flip. So the chart's heating up. It just needs to follow through here and break resistance. So keep an eye on SINO. Okay, so this stock is in the bull zone on RSI and Fasto. What's going on here is it broke above this descending resistance line and then above the moving averages. If you look over here, it's currently at 315, and then if you look at the moving averages, the top moving average is the 50-day simple moving average at 304. So it's currently above all the moving averages. So it's very, very strong. It's forming these black candles. It's making very small moves. It's got the long upper and lower wicks and the really good volume. This is looking like possible loading. As long as it stays above the 50-day simple moving averages, it stays above 3, it is in play. If it drops below that level, that's going to signal consolidation. To the upside, 360 is the next target. That's the top of this candle, and then 375. If it can close above 375, it could really get moving. So yeah, keep an eye on SINO, and then take a look at ESEA. So this is another stock that's been doing well, that formed a black candle today. It's got RSI up here at 76. Notice that in the past, it tends to top out at this level, so it's hitting the same level where it's formed tops in the past. Okay, so it'd have to break the trend to head higher. It does have Fasto low down here with those upper wicks on the candles that tends to lower Fasto, and so yeah, and you don't have the crazy spike yet on ADX on plus DI. So this is another one that's just been breaking out slowly. It's above. It formed the black candle today, so that does signal that the candles could work back in the bands. Notice how there's a space between the upper Bollinger Band, which is down here at 211, and the bottom of the candle, the lower wick here at 220. When you get a space like that on the chart, even though the gap is filled, by the wicks on the candles, many times the candles will still work their way back in the bands. It'll bounce off of EMA for support and then continue higher. So if that happens, 209 will be the big support level to hold. You want to see this high close in October turn into support. So you don't really want to see it dropping back below 198 or $2. That level needs to hold for this to launch to the next level. So yeah, the stock's been doing well. It's got a good uptrend going. If you look at the weekly chart here, it's got a nice steady uptrend. You can see where the uptrend started back here in July, when it was turning the middle Bollinger Band into support, then finally got going in August. And then once it broke above the 50-week moving average, it really got moving. And then last week, it closed above the 100-week moving average, and now it's pushing higher. Notice how it's trying to bust through the top of this channel. It's hitting the top of this multi-month channel. And then it's also hitting the next key resistance level, which is 250. Okay, so that's the high close from back here in November. If it can close above 250 for the week, that would be extremely bullish, and that would be the highest weekly close in an extremely long time, and that would put the 200-week moving average at 535 on deck. So a close above 250 for the week would be signaling a lot more upside potential. If it fails to break the 250, that could signal a temporary top, and it could consolidate. It's filled the jar back to that level. That's now that the upper wick has hit that level, this jar is filled. It started back here in November with the high close, came down, and then worked its way all the way back to that level, and now it's November again. So it's taken a whole year to complete this cycle. Now it's either gonna, now it's got to start a new cycle, and that's either going to be a break above 250, or it's going to be more consolidation and breaking down. So yeah, we're going to see if it can head higher. If you look here at the 15-minute chart, you can see here it's got a nice uptrend going over the last 4 days. It's trading above all the moving averages, the 300, 200, 150. Right now the Bollinger Bands are tight and is below the middle Bollinger Band. It needs to get back above 236, and then the big level to break is going to be up here on the high close at about 257. If it can get above that, that's going to signal it wants to head higher. If it drops below 225 here, notice how that's lined up with the 50 simple moving average at 222. If it drops below those levels, that's going to signal consolidation. You could see a drop down to $2. If those levels hold, that's going to signal more upside, and then you're going to want to see the break up here, the break of high close resistance here at 10 o'clock today. Okay, so that's the big level there. And then if you look at DCIX, you can see it's okay. So this stock, like I said before, it had made it was trading lower in after hours yesterday, so it was bucking the trend. And even though it was up big on the day, it was still signaling that it was under pressure. And so we were looking for potential pullback today, and we did put out alerts on that. Now a red candle formed today, and that did form bearish engulfing reversal pattern. And so the candles are working their way back into the bands. The positive out of this is that there was only 6 million shares traded compared to the 42 million traded the previous 2 days. So that's what you want to see. You want to see less volume on down days and more volume on up days if you're a bull. So that's good. It wasn't there wasn't 20 million shares traded on the down day today. That would be a major red flag. It's still a red flag. Bearish engulfing is a very strong reversal pattern, and that is still a huge volume spike for this stock. And so the bottom line is it's got to hold this pink line. That's the target for a potential bounce. Now it's down to 1271. So you always have to keep in mind that the moving averages are changing, so you have to adjust your targets accordingly. And we had this, it was around 13 earlier in the trading day. So now it's down to 1227, because if that breaks, then you could see the big drop down here to test the 50-day simple moving average and the EMA 13. So you could see the drop down to $7. So it's got to hold this 1270 level, or you could see a drop down here to test this 50-day simple moving average that just broke last week on Friday. So the chart's still really strong. It's still really healthy. It just got so ahead of itself. A pullback it could have a healthy pullback and still have a strong chart. To the upside, there's a gap here from August, and so this is the first gap to break. It hit the bottom of the gap and then started working its way. Like I said on that last chart, notice how this candle yesterday was floating above the upper Bollinger Band, and now the candles have worked back into the bands. That's what they do. It just history repeats itself. And so if it can break through this upper gap, then there's another gap just above. So first things first, we got to see if it can hold this EMA 4 support. And yeah, if you look here at the 15-minute chart, this is the one we were working on yesterday. We were saying, it'll be a big red flag if it broke this green ascending support line. And so notice how today that happened at 10:15. There was a break below that level, and then notice how that signaled the start of the downtrend. So there was a big warning put out yesterday. It was already signals that the chart was breaking down with the close below the middle Bollinger Band, but it did have the gap up open. But there was a black candle, and then it failed to hold the middle Bollinger Band. When that middle Bollinger Band turned into resistance, it was a big red flag. The candles were forming below EMAs 4 and 8, and then right here at 11:45, there was a close below the green line, which is the 50 simple moving average. That was another red flag, and the share price really started dropping. Okay, so it came all the way down to the 100 simple moving average. That's the level it's holding holding at 1391. It has to hold that level, or else that 8 level's coming up again. Yep, it could drop all the way down to 8, just like notice how the 200 simple moving average is at 8 on this chart, and then you've got the big level at 8 down here, 750 to 7 to 750, basically the 8 zone for the 50-day simple moving average. So that makes it a really big target for the bears to pull it back to. And then you have the 300 simple moving average at 658 just below. And like I said, many times when they get down to that 200, they drop it all the way down to 300. And that's a level that many times you can take new positions for a bounce play if that level holds. The red flag on the chart, though, is there's an unfilled gap. Look back here between high of day on the 2nd, which is the top of this candle, and low of day on the 3rd, which is the bottom of this candle. There is a gap. It would have to drop down here to about 350 or so to fill the gap. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.